Hello folks, this is Jimmy Nelson from Nelson Financial with an educational economic update for January 2019. In this month's video, I'll discuss some of the major headlines that influenced markets in December. I'll also provide insight into what these developments could mean for you as an investor. Please stay tuned at the end of this video for a required disclosure statement. So how did we close out 2018? To put it bluntly, December was a challenging, volatile month for stocks, as equities also ricocheted between losses and gains. Want an illustration of how dramatic the turbulence was? Consider the Dow's performance on the days surrounding Christmas. First, the Dow experienced its worst Christmas Eve in history. Then, the very next trading day, the index posted its largest points gain ever. That experience was pretty much December 2018 in a nutshell. In fact, despite positive returns on the year's final trading day, the Dow and S&P 500 had their worst December results since 1931. All three major domestic indices also had their worst annual returns in a decade. In 2018, the S&P 500 lost 6.2%, the Dow declined 5.6%, and Nasdaq gave back 3.9%. Just a few months ago, the indices were reaching new record highs. So why the about face? Well, many investors sold off stocks in reaction to worries about economic growth, the Federal Reserve's policies, and ongoing trade tension. However, that answer could oversimplify the situation. Some people blamed computer-generated trading for the intense fluctuations. Others said we were in a, quote, period of hypersensitivity to headlines. Of course, investors had many headlines to digest, including a government shutdown that was on its 10th day by New Year's Eve. But we want to take a moment to look beyond the biggest headlines and see what the data told us in December. In the latest readings, we learned that personal income was up 4.2% over the same time in 2017. The manufacturing and service sectors both beat expectations. The economy also grew at a 3.4% annualized rate in the third quarter. That reading was slightly lower than initial projections, but at the same time, only one quarter had faster growth in the past 4 years, and that was the second quarter of 2018. In other words, several data points are showing that beneath the market gyrations, the economy is still strong. Federal Reserve Chairman Powell echoed these sentiments when announcing interest rate increases in December. More concerns might be here, and the markets might not like the interest rate increases. But by the Fed's assessment, our current circumstances indicate, quote, a very healthy economy. In the new year ahead, we will continue to monitor the market's real risks and opportunities. One thing that won't sway us, however, are the headlines. So that's it for this month's Educational Economic Update. Once again, this is Jimmy Nelson with Nelson Financial, signing off for the month of January 2019. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please give us a call. We'd be happy to talk with you. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decisions. Investing involves risk, including the potential loss of principal. No investment strategy can guarantee a profit or protect against loss in periods of declining markets. The indices mentioned are unmanaged and cannot be invested into directly. Past performance does not guarantee future results. The modern design of the S&P 500 stock index was first launched in 1957. Performance back to 1931 incorporates the performance of the predecessor index, the S&P 90. The opinions in the preceding commentary are as of the date of publication and are subject to change. Information has been obtained from a third-party source we consider reliable, but we do not guarantee the facts cited are accurate or complete. This material is not intended to be relied upon as a forecast or investment advice regarding a particular investment or the markets in general, nor is it intended to predict or depict performance of any investment. We may execute transactions in securities that may not be consistent with the report's conclusions. Investors should consult their financial advisor on the strategy best for them. Past performance is no guarantee of future results. Securities offered through Kalos Capital Inc., member FINRA SIPC MSRB. Investment advisory services and SEC registered investment advisor offered through Kalos Management Inc., both located at 11525 Parkwood Circle, Alpharetta, Georgia 30005. Nelson Financial Strategies Inc. is not an affiliate or subsidiary of Kalos Capital Inc. and Kalos Management Inc.